Let's welcome in our next guest, Hemindra Hazari of HemindraHazari.com. Hemindra, good morning. In terms of banks, when they actually get such huge deposits, does it become a problem? Where do they park this money and still they continue to pay interest? So that can actually work negative in the near term?
Good morning, Pankaj. Yes, in my view, what is happening to banks, everyone is saying there is surplus liquidity, the rates will come down, it will be positive. In fact, what is happening is that they're getting an overdose of savings accounts, and they are unable to park it in any, long-term asset, because the moment the withdrawals are removed, there is going to be an outflow from all these banks into cash into the economy. Plus, now with the imposition of the RBI on the CRR, they are not getting any yields on these type of funds. So they are in a catch-22 situation that they have to pay this minimum interest, and at the same time, they're not able to get any yield from these funds. And even if they put it into treasury, in my view, they will be getting an incremental negative spread or a marginal spread at best. So it is going to create a problem for the banking industry as a whole. And mind you, one thing, what has happened is since demonetization, nobody is talking about non-performing assets of banks. That whole topic has just disappeared from everyone's attention, and NPAs are mounting by the day. Yet, because of demonetization, nobody seems to be getting worried about the non-performing assets problems of Indian banks.
Actually, the non-performing assets could only increase because of this, at least on the retail side as well, which was small ticket size, payment was back in cash, the business that they were doing in cash, but till now everything was fine, so they were paying back.
It's going to impact retail. It is immediately going to impact all your loans to the micro and small medium enterprises. The entire cash has, they are at a gridlock. There is no, good movement taking place because their entire production, distribution is based on cash. That has totally ceased. So all this is going to have huge problems for the banking industry. And today, if you go to a branch, all they can talk about is this demonetization. They have no time for any other activity. So all other activities of the branches have stopped because everyone is focused on cash. And as you know, if you visit a branch, there's hardly any cash in the first place.
So the fee income will take a big hit?
See, fee incomes will take a big hit. You will have problems even of growth, because even before demonetization, if you saw the credit to the commercial sector, it has shown a decline. And this has been the worst performance even before demonetization of industry. And on top of that, you've announced this very ill-conceived measure of demonetization, which is going to give a death blow to demand. So therefore, everything is now going to cease. There's going to be, hardly any economic activity. And therefore, people are talking, you don't, worry, growth will bounce back. Now, if your GDP growth declines in this first year, then obviously it will bounce back. But that is no argument, because what the incomes that you have lost cannot be recovered.
Right. In terms of policy tomorrow, you think it will be interesting to see RBI's assessment, whether it will be a temporary impact of 1 or 2 quarters, or whether it's an enduring assessment that they do of demonetization, which can last for 4-6 quarters?
See, even if RBI does an assessment and they publicize, what is the credibility of that assessment? I think since demonetization, one institution whose credibility has been severely impacted under this governor has been the credibility of the Reserve Bank of India. Now it is very clear to everyone that they didn't have any proper planning. We don't even know what discussion took place at the board level of RBI. Were the pros and cons discussed? What were the alternative plans? Did they have any such discussion? Or was there a proper board meeting where all the board directors were present? So because this has been a total fiasco, so what is the credibility of RBI's assessment on any monetary measure that they undertake?
Right. We'll wait and watch for the commentary tomorrow. But in terms of corporate profitability, what is the sort of impact that you see coming in? Do you think H2 will be very, very weak, even for the Nifty 50 companies?
No, it should be very weak, because demand, as it is, if you see the corporate sales over the last couple of quarters for the entire universe, which RBI also documents, you'll see a very clear decelerating trend of sales growth. Now you're going to see a collapse in sales, because we're already seeing that with the micro and small and medium enterprises, which mind you account for along with agriculture, account for more than 80% of employment. So it is bound to have and should have an impact on any corporate which is exposed to the domestic industry, on the domestic economy. So I'm bound to see an impact in the second half. And now, mind you, people are saying, no, then, the first, of the new financial year will be good. There will be a bounce back. But what about all the sales which has been lost? That cannot be recovered.
Right. In terms of small and medium enterprise, that's where the big hit will be. Can organized large players benefit out of it, or you think it will take really some time for that transition?
See, organized players are expected to benefit, but if your total pie is shrinking, what's the point? What's the point in an emerging economy if your total pie is going to shrink? The whole point of being invested in an emerging economy like India is that the pie will keep increasing at a much faster rate than the developed economies and elsewhere. That is your whole supposedly India growth story. Now, if you're going to say, no, the organized player will increase their market share, yes, I mean, it'll be positive, marginally positive for their shareholders, but we want to see the total pie increasing. Now, how is that going to happen? How are the benefits of demonetization going to increase the total pie? I think that's what has to be seen, that's what has to be quantified. And unfortunately, today we are unable to do that, while the negative impacts are very tangible, but we do not know on how to measure what positive impacts, if any, are going to come about because of demonetization.
In terms of NBFCs which were catering to these market share increase or this market increasing on the retail side for autos, for some other loans, do you think will take a big hit, or it will just be a temporary impact?
See, everyone is hoping that it is temporary, but we really don't know, because this kind of exercise has not been done on this scale anywhere in the world. So I think there's going to be an impact. You should not underestimate that impact. And microfinance companies, which was the darlings of the stock market, pre-demonetization, are going to be severely impacted because all their transactions are in cash. They give cash loans and they take back cash recoveries. So with that, there's going to be a big impact on them. And that is going to feed into all the other sectors and, the other financial intermediaries as well.
Right. We were talking to a microfinance company, Equitas, yesterday, and they said that 60 to 70% of their businesses is now on the digital side, and they're not seeing any problem over there. You think when the growth emerges in these businesses, it'll be much better?
Firstly, I think they're being extremely optimistic when they make that statement about going digital. Because one has to understand, if you're operating in rural India, as many of these microfinance companies are, the digital connectivity, the access to smartphones is significantly less than urban India. So I think there is a huge overestimation of that kind of positive impact on this whole notion that in the government has rediscovered this whole thing about going digital. In India, you really don't have that infrastructure once you step into rural India for all these things. So in my view, most of these companies are going to face a lot of problems.
Right. And what do you do in the near term? Their valuations are also not supportive. So it's not attractive despite the 20% fall that we've seen for this sector?
No, because I think the impact of demonetization is going to be there for about a year. So I would say you just stay away from any financial intermediary and just best to be in cash, because today cash is one precious commodity.
But that also withdrawal limits are there. So what do you do?
Well, unfortunately, there's not much you can do apart from selling your stocks and watching that cash balance of yours go up.
Right. Any which ways, on the interest rates, what do you think? With deposits coming down, or deposits rate if they come down in the future, what do you think will happen? Will mutual fund industry benefit? Will equities and debt mutual funds start to get better flows? Will corporate fundraising become easy via retail? Is that a sector which can benefit out of this?
See, now you understand one thing, that if the interest rates are reduced at a point when the US Fed is talking about increasing interest rates, then the kind of outflows which we can see from foreign capital into India, that is one major decision that the RBI and the government has to take. Because at this point of time, there's already been a significant foreign outflow in terms of equity, and it's also started in debt. So if you reduce the interest rates and you have this interest rate globally differential, you don't want to see a capital outflow at this point in time.
No, but you cannot not reduce interest rates for capital outflow. I mean, there's no demand in the country. Cost of fund has gone down, liquidity is abundant, so they have to reduce rates, right?
Yeah, but see, by what? By how much? If you do it very significantly as to try to stimulate the economy, which I've always been arguing that you require 100, 200 basis points reduction, can you take that type of call? Because if you're going to do by 25, basis point is neither here nor there. So that is the main issue. And today, mind you, banks, whenever the interest rates are declining, Indian banks have always been very hasty in reducing deposit rates. They have been far less hasty in reducing the lending rate. Because as I've said before, NPAs are piling up. The moment you reduce your lending rate, it has your margins get squeezed. So that's what you will see, that even when they reduce rates, they will be far more aggressive in reducing deposit rates and be extremely miserly when it comes to reducing the lending rate.
Right, but now even with this demonetization, a lot of businesses would not be viable. So the working capital demand will go down. Credit growth, which we have said for the last 1 to 2 months, have already taken a big hit. So don't you think that they would have to reduce it? Market forces will force them to reduce it, even lending rate or better transmission.
See, that is the issue that I'm saying, that if it has to be reduced to have some material impact, it has to be reduced significantly. Now, can India reduce the interest rates very significantly? What will typically happen if it's a very significant reduction? All the foreign money which is in Indian debt is going to pull out, and naturally so. Now, we don't want that happening at a time when demand is collapsing because of this ill-conceived demonetization move.
Right. Okay. Say if the interest rates tomorrow are normal and it's accommodative. Do you think market has factored that in? There is no need to get excited if there is a 25 basis point rate cut with a substantially accommodative policy?
Yeah, I don't think market, by and large, is expecting, I think, a rate cut. But, I don't think it's very significant. So I don't see the market really reacting too much. But I've always said this, repeatedly, that is not interest rates and inflation one really has to look at. It has been demand. And that has been the problem in the Indian economy even before demonetization. And it has become much worse after demonetization.
Right. In terms of, the commentary tomorrow, it will probably be the first time, where there'll be a Q&A session. They'll speak on demonetization. We have about 20-30 days gone into demonetization. What would you want to hear on commentary? What are things that you would expect them to talk about?
Well, let's firstly hope that there will be, a Q&A session, because in the last policy there were hardly any questions and even fewer answers. So if there is a vibrant discussion, then I expect business media, which unfortunately refuses to ask any hard questions, I hope they do find their voice and ask some very hard questions to the governor. As I said, what is your strategy? What were your views on this? And how do you possibly think that you can recover from this situation that you've put the country through?
Right. In terms of, notes printing, availability of liquidity, withdrawals getting back in the system, only after that you believe a little bit of confidence would come in, and then only if we see a pickup in the growth, things could be normal?
Yes, but you see, that is really not now in the hands of anybody, because your printing presses have a certain capacity which cannot be changed overnight. It cannot be changed even 6 months down the road, even if you put one more extra shift. So that is, the supply is a problem, and that is fixed. So there's nothing one can do about it. You cannot increase it substantially. So you have to live with this, as I said, for the next 6 months. So I don't see what additional information, which already RBI has been extremely parsimonious in giving to the public, that they can give, which can add value now.
Right. Let's talk about sectors which can benefit out of this. Every big move as this, would tend to lead to some sort of sectors benefiting. One would, of course, be digital, like Paytm, probably FreeCharge, MobiKwik, but they are not listed. On the listed space, where do you think you will see benefits of this move coming in?
See, any economy, any sector which has got some digital which has a higher percentage of their payments through the digital medium, because everywhere normally you're going to see a problem of demand now. Everywhere there's going to be a problem of cash collection. So there are very few sectors and companies which are exposed to that, because the best are, as you said, the Paytms of this world, but they are not listed. So, even the banks which have been, touting digital, end of the day, the bulk of their business has something to do with cash and is cash linked. So there are not that many, large companies or sectors which can absorb too much in investor flows.
Right, but still, say out of the listed space, if you have to put money, right? A lot of these funds have mandate to put money. Where would you put? You said that banks are not attractive because they are into the transition phase, how things would happen. Where would you essentially put your money?
See, in this matter, please understand, you don't have to be in equities. You can be in debt. And if the interest rates are to fall down, it will be better to park yourselves in debt, at least get some capital gains on your debt holdings. So one does not necessarily have to have all your holdings in equity. I think that is the game to be played, really, that you have to shift out from equity and move into debt. Unfortunately, that's not what most of the equity fund managers you talk to or interview will tell you.
Right, but in terms of IT, probably pharma, where there is a lot of business which comes out of India, it's not dependent so much on India, and valuations are decent after correction, one can still go overweight?
See, the entire export sector as a sector per se can you look upon it as a move? Because that has really, they have very limited linkages to the underlying domestic economy. Having said that, this will only be a kind of a very relative call. Because with the automation...
Yeah, I'm talking about tactical
yes,
call.
So in a tactical call, then yes, in any export-oriented sector, you can go for. But please understand that even the demand that was, the people were saying there'll be better demand in India and less demand, because of poor global growth, and that's why you have to go into the domestic and facing companies. Now that entire argument is again getting reversed, even though the global outlook is not very good. So again, you have problems with pharma, but yes, in a relative sense, you may be better off.
Right. Hemindra, thank you so much for taking out time for us. Hope to chat with you again quite soon.